Okay, so we're going to prepare the statement of cash flows from first the operating section. So first we need net income, and net income is $19,400. We have depreciation on here that we need to add back. So add back depreciation, which is $13,100. That's all from the income statement. Now the balance sheet. The long-term notes payable on equipment, that will be in another section. So the change in current assets, it looks like assets went up. The change in accounts receivable, it was an increase of $4,500. So increase means a decrease when it's a current asset. And then that's all the assets, the current. Liabilities went up. So we have an increase in accounts payable of $1,000, and increase means increase when it's a current liability. If you say $13,100 minus $4,500 plus $1,000, you should get $9,600. Now take net income, which was $19,400, and subtract $9,600, and the net cash provided by operating activities is $29,000. Now for the investing section, it looks like we bought equipment, and it says assume the equipment was paid with cash. So we acquired equipment, and it cost us $19,100. And then I believe that's it. We don't have anything else. We didn't sell any. So the net cash, now we spent money, so I need to put a parenthesis around it. So it shows that we used cash. We did not receive cash. Okay, for the last section, it looks like we issued a note payable for $5,000. So we're receiving cash for issuing a note, so we're receiving $5,000. But then we also made payments on a note of $7,000, so that's an outflow. And then stock went up, so we received some money for stock. It went up from $15,000 to $19,000. So $4,000. Now dividends. Let's look at retained earnings. Retained earnings, the change in retained earnings is not the same as net income. If retained earnings would have went up $19,400, then we wouldn't have given dividends. But the change is very small here. So let's look. $53,300 minus $45,500 is a change of $7,800. So take what net income was supposed to be, $19,400, and subtract out the, I believe it was $6,800. And that will tell you how much in dividends was paid. So $12,600 is a payment of cash dividends, which is an outflow. Now we have to add those numbers, net those. Okay, the change in retained earnings was $7,800, but if we didn't pay dividends, it's been $19,400. So $19,400 minus the actual change of $7,800 would be the $11,600. So you net those numbers and you get $9,600. So the change in cash is $4,400. It went up by $300. The beginning cash balance was $4,400, and the ending cash balance was $4,700. Okay, we're only doing a partial statement here, just the operating section. So net income is $45,000. And then all we're going to do, so we're going to add back depreciation expense. We have an increase in accounts receivable. Remember, increase, decrease when it's a current asset. And we have a decrease in accounts payable. And remember, it's a current liability. Decrease, decrease. So if we net this, we would have negative 2,000, so put it in parentheses. 45,000 minus 2,000 would be 43,000. And then for the last one, we're going to do the full cash flow statement. So we have net income of 34,000. And then for operating, it looks like we have depreciation expense of 3,000. Let's see, dividend, stock, purchase of equipment, a decrease in current liabilities of 6,000, decrease, and then an increase in current assets other than cash, increase, decrease, 15,000. And I think that is it. So let me net this out. So that would be 21,000, and then 3 would be a deduction of 18,000. And 34,000 minus 18,000 would be 16,000. Now for the investing section, it looks like we purchased equipment. And the equipment was 42,000. That's an outflow. Dividends, cash receipt from the sale of land. So we sold land. So that would be an inflow. And I don't see anything else. The net of that would be 9,000. And then financing, it looks like we paid dividends. 5,700, that's an outflow. And we issued stock, that's an inflow of 20,000. And I skipped payment. No, I did payment of dividends. Stock. Purchase of equipment. Decrease. Okay, I think that might be it. Let's see. Let's see. That's 5,700. Okay, so that's not going to be a negative. That would be 14,3, I believe. Okay, and then the change in cash, it looks like it went from 50 to 71.3, so we have an increase in cash. The beginning balance was 50,000, and the ending balance was 71.3.